We rate the hot chocolate budget. What's the crap wreck going on Wall Street right now? And can the CBA hit $100 plus? I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money. All right, Paul, you're the one who told me someone on the ABC called it a hot chocolate budget. Everyone's a winner.
Everyone's a winner, baby. Yeah, but I heard that a couple of times on the radio this morning. A few others sort of.
Everyone liked it. Yeah.
We admit it's not ours. It's not ours, right?
No.
We plagiarised it from someone else, but
Yeah.
everyone was a winner last night.
Yeah,
Right?
I call it a vote for me budget from Prime Minister Morrison and Josh Frydenberg, the Treasurer. But Paul, we often criticise politicians when they go for this, this money throwaway type budget. But to me, it's the right time to do it because we really do have to get the recession that the coronavirus brought out of the way. What do you reckon?
Yeah, look, I think it's still on the right track. I mean, you'd like to see something structural there. They're going to have to address the deficit at some stage. But in the short term, it's good for the, because of all the stimulus around, it's good for the consumer discretionary stocks. So your retailers like JB Hi-Fi, Harvey Norman, AP Eagers, anyone in the car business, traders are going to be buying utes, as the Sydney Daily Telegraph screamed this morning. The ute budget, and
it makes the road more dangerous. More tradies with utes.
I hate those big utes, right?
Scare the crap out of them.
They really annoy me.
Yeah.
But anyhow, we're going to see more of them on the road because of the tax incentives, so they can do the instant asset write-off.
Yep.
That's continued for a year. Good for a lot of the home builder, homemaker type companies because we're going to see a continued home building and infrastructure boom. So that just continues. Lots of incentives there. Yeah. And in the long term, Peter, good for some of the biotech companies because we've got this new, I forget what they call it.
Patent box.
The patent box, right?
Put your patent in the box.
Put your patent in the box and pay a tax rate of 17%. The downside, of course, is it only applies to patents registered after the 1st of July 2022. Maybe that means some of the research gets put off. I don't know. But and it obviously doesn't apply to any existing biotech companies, but expect some, I think, some work there, and we'll see a little bit of a support for some of those companies. Maybe not today, but in the next few months.
I feel like H.G. Nelson when I say, and how long have we been waiting for a digital tax concession, a concession for DigiGames?
And the
digital games,
right? We tried to find a DigiGame company. This is the new DigiGame.
It can't be gamblers, can they?
It can't be gambling. Every digital games company we could find was involved in gambling. But, the biggest games are not gambling games. It's okay to kill people in a game. You can't gamble.
But I think the point is that private companies, there's lots of private companies, they'll do, but there's no listed companies. Let's go to the second one, Paul. There's a tech wreck going on in the US right now. I think it's a crap wreck. What do you think?
It's a bit of a crap wreck. I mean, I think the destructive trade last night was to see the Nasdaq bounce back. It was off over 2% at the start last night. When I looked at it at 10:30 just before it opened, it was down 2%. Nasdaq actually closed almost unchanged. Yeah. The carnies went into the other part of the market, and some of the major companies actually rallied. So look, I think this is just the rotation's there. There's nerves. They're talking about inflation. Yeah, okay, we've gone through that before. Rates. But the bond market really ain't moving too much, folks. Yeah. And I take a lot more notice of the bond market than the talk about inflation. So they've got some inflation data out, I think, tonight. I mean, I think. The employment data is obviously a lot of profits, right? There's a lot of money being made in this bull market, and you're going to get through this sort of occasional bounce of nerves, and volatility is going to spike, and I think that's what we're going through at the moment.
Yeah, and I think if you're not heavily invested in tech stocks, it's a weight game. There's going to be a good buying opportunity because a lot of these tech stocks are the companies of the future. They're the Zooms, they're the Afterpays, they're the Zeros. These companies are going to get bigger and better over time because they're actually attuned to the modern economy. But that's for another day. Finally, Paul, can the CBA get over $100?
Well, I made a call on the CBA back at about 2014, 2015.
I've been embarrassed ever since.
And it would get through $100, and it didn't. It topped out about $95.80, I think, from memory. And that was, of course, before the Hayne Royal Commission and all the other stuff they copped. But look, we're now back up there. Third quarter trading report this morning out. An underlying cash profit, I think, of $2.4 billion. For the quarter.
Is that a good number?
Yeah, it's not a bad number. I mean, look, a lot of that is due to write-back of provision, so it's about a $400 million roughly write-back, so negative credit losses. But it's still up on the quarter. they have had income growth, and I think the biggest bit of the data there is that they've above system growth in home loans, above system growth in business lending, and above system growth
Forward
on
indicators look
deposits.
good.
So that's what the banks have to do. I mean, the biggest challenge banks have had is about growth, right? How do you grow income when volumes have been falling, and they have, and NIM, that's the interest margins, also been falling, and they're having to refund fees, right?
Yeah.
So all the negatives. Now we're starting to see a little bit of volume growth from the leaders. We're starting to see a bit of NIM stabilised. Where else are you going to invest? So I think it's, look, quarterly reports don't tell us a lot, and the market will probably go, well, a lot of this is priced in. But I think that there's still going to be a strategy of the major banks buy the worst and the best. Sorry, the best and the worst. The best is CBA by a country mile. The worst, I think it was Westpac. I'm starting to think NAB is looking a bit cheaper again.
Okay, and I think the bottom line is, if the budget forecasts are right, and I think they are, that we're going to be growing over 4% in the financial year coming up, and business investment's going to be up 10%, then you're going to have a strong economy, and the CBA will be a great beneficiary of a strong economy.
Yeah, and I should just caution, I might say the worst. I meant the worst in terms of value for money, right?
Yeah.
And not necessarily about what they're doing, but there's clearly...
Basically, when you see the cheapest one, you often said that's the worst, and
Yeah,
it's got value on the way up,
Yeah,
hasn't it?
and that's what I'm really talking about. So before anyone from my colleagues at NAB get on to me, I'm not saying a big go at you. I'm just saying it's in the terms.
You're saying it's a buying opportunity.
It's a buying opportunity, yeah.
I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money.
Shh.